How do you fix your trading when your equity graph looks like this? You can see we have 53 trades here, a total win rate of only 35% and a return of minus 10%. So it doesn't look good, but how can we fix this and what should this trader do about his trading? Probably a lot of traders will now go to the setups and look for underperformance. So here we can see that the breakout setup is not performing, trend continuations don't work, pullbacks don't work, and the only profitable system or the strategy is here the EMA rebound. You might also go to the instruments and maybe try to avoid the instruments that are underperforming and look at the ones that are performing well. But the real problem here is the execution and the discipline of the trader. When we go here to the trade comments, we can see that we only have 16 out of those 53 trades where the trader is following his rules. And we have 14 trades where he entered too early, 10 trades where he go a counter to the trend, 4 trades with a mistake. So what we can do and what we should do here is instead of looking at the setups or the instruments, we open the advanced filters and we only want to look at the trades where he's following his rules, because only those trades will show his real trading system. Going now back to the equity graph, we see that this trader has only 16 trades where he's followed the rules. The win rate is still not great, 50%, but he's now making 5% instead of losing 10% as we've seen in the beginning. So the trader only has 16 trades where he's following his trading rules and 37 trades where he is going against his trading rules. And this is the huge problem of this trader. It is not necessarily an underperforming setup. It's not an instrument that the strategy is not working on, but it's the mindset and the discipline and the execution of his trades. And traders who don't follow this approach will go to their setups and they will look at their setups and think that they should avoid breakout trades or pullback trades or trend continuation trades, because looking at this, it looks like those setups don't work. But let's turn on the filters and we only want to look at the trades where he's actually following his rules. And here we can now see that pullbacks are actually performing really well. The EMA rebound is not performing as great, trend reversal seems to be working, and also breakout trades are working as well. So the trader would draw the wrong conclusions if we would not look at the trades where he's following his trading rules. And all of the other trades where he didn't follow his trading rules, they are skewing his performance here. And you would definitely draw the wrong conclusions and maybe try to avoid some of the setups that if you don't apply this filter, you would then look at them and see, okay, breakout trades don't work, pullback trades don't work. But as we've seen, the core strategy, when the trader is following his rules, is making money. So it's not about the setup, it's always about the trader. When we go to the journal, we can see that the trader has quite a lot of notes on his trades, which is good because we can learn more about the execution and what the trader is actually thinking about his trades. We open this losing trade, we scroll down to the personal notes, and then he said he entered too early and he should have waited for more confirmation. We can open another trade here, and when we go to the notes, it says it's an aggressive entry, especially no catalyst, should be more patient to wait for it to pull back pre-market. Let's open a third trade here, and when we go to the notes here in this trade, he said, I had also entered the wrong units to buy because I was looking at many tickers and trying to get into any trade that I can get, very FOMO. And this seems to be his biggest problem, FOMO, over trading. Whereas he only should have taken 16 trades in this period, he ended up taking 53 trades. 37 of them don't match the criteria, and when we go back now to the trade comments, we can see that his biggest problem is indeed entering too early. So this trader doesn't have to necessarily fix his setups now, he doesn't have to avoid certain instruments, he doesn't have to get into the nitty-gritty of custom statistics or any other metrics and features that we have in Edgewonk, but he needs to work on his execution. But the big question here then obviously is, how do you do that? You have a few options here. First, this trader should try to reduce his screen time. So after he has done his morning scan and he is setting up his trading plans for that day, if the trader sees that there are no setups for the day, then he should close his trading screens and walk away, just to remove himself from the opportunity to take any FOMO trades, even though there are no good setups. The trader can also consider working with price alerts to improve his scanning routine. So whenever he finds a good level or whenever he looks at a price area where he wants to get into a trade or he's interested in a trade, put a price alert there. This will also help him to improve his routines and also not miss as many trades, and also only look at the charts when there's absolutely something that is worthwhile to look at. As we've seen in one of the comments, he said that he's following too many tickers, so he could also try to, for the near future, remove and reduce the amount of markets that he's scanning. The more markets that you are scanning, the more potential opportunities you might see, but also the more tempted you will be to jump into trades where your criteria don't fully meet. And those traders who have an issue with FOMO trading will often benefit from that. Something that the trader can also consider and think about is that maybe there's a misalignment between the trader and the trader mindset and his actual trading strategy. This trader seems like he has a need to trade and he wants to trade all the time. And if such traders then trade with a longer term strategy where you don't have as many signals in a given period, there might be a misalignment. So such traders can often benefit from approaching or from having a trading system that is a little bit more fast-paced, maybe on the lower time frames where you potentially can catch more trades. However, there's also the risk that when FOMO traders go to the lower time frames, they will just end up taking even more trades that are not following their trading rules. So this needs to be done with care, and the trader has to be very, very self-aware and make sure that he's not falling into this trap. But the traders do have a few options here. And the most important takeaway here is that the trader recognizes that it's not the systems and the setups that he's trading that are the problem, but it's actually the trader himself that is causing the losses here. And this is a very important finding. It can also be a very helpful finding because you will see that there's no need to work on the setups necessarily, and there's no need to dig into all the data points and try to tweak the systems and the parts of the system.